Hey everyone, thanks for joining. And I want to firstly apologize for the late posting of this video. But with that said, I want to deliver as promised and go through this best trade setup series with you. Hopefully, it will help you to, as always, improve your trading and add more value to you as a trader. All right, so yesterday, I don't know if you would have noticed a trade I took on GBP USD, which was a first green day setup. And that's what I want to discuss today. It's the first in a series of best trade setups. I will eventually get into the first red day, the first bounce trade, 3-day cycle trades. Well, we did the initial balance and opening range already. There are also day count trades. There are quite a few setups in terms of options, and I think having the options gives us an edge, meaning we can decide, okay, I will only be looking for this setup, and if this setup doesn't present, then I'm not trading. It's a good way to add some structure to the rules that you have for trading, so you don't overtrade or anything like that. So what you can do is, having gone through this series, go back to your charts, look to see how, well, which ones you would prefer. Maybe you can choose two of the lot and decide that, okay, these are what I'll be looking for. If you believe that this is how you would like to trade, that is. And yeah, and just do that. So I will go over what a first green day setup looks like, and what do you look for in terms of getting an entry into the market. And I'll also show you some examples of that on the charts as well. All right, so let's get into it. Well, the first green day is not these guys, that's for sure. So the definition is, a first green day means the stock price has risen for that day after a period of red days. That's according to lunchbreakinvesting.com. But as it relates to this strategy and style of trading, it's a day basically, and simplified in terms of the definition. It's a day where the market has closed above its open price after a dump day, meaning price would have fallen the day before or several days before. You would have had lower prices coming into this day, and then today you would have had price closing above its opening price for that day. Now, how do you apply a first green day setup? It's a buy low setup. So you're going to buy the low of the day, or it can be the low of the week, or it can be the low of the session. But you're looking for a buy low setup. Anything else will probably mean that the setup hasn't completed and you're entering too early. I will go over other scenarios as well as to what could change our first green day setup, but we'll get to that as well in the examples. Now, the steps to take to trade this setup. What we're going to do is mark the consolidation going into the close of the day of the first green day coming into the setup day. So that means, all right, for example, as I was referring to the GU trade that I took yesterday, yesterday was a setup day, but the day before that, what happened was price closed above its open after a few days of price falling. So we would refer to that as the signal day, that is not yesterday, but the day before, where price closed above its open. So we get that signal day. So the next day we know exactly what we're going to the charts to do. We're going to look for a buy low setup. And this is how you start to look for that setup. You look for the consolidation coming into the close of the day, coming out of the first green day signal day. Then you wait for price to do a stop hunt. It will be a false break reversal at the low of the consolidation range, or it can be at the low of the day, the low of the week, the low of the month, low of the session. However it plays out, you're looking for that stop hunt, which gives you that false break reversal. And then you're looking for the breaking structure, sometimes called change in character. And you're looking for a retest to that area. For my entry confirmation, I'm going to be looking for a pin bar and an engulfment of that pin bar. For you, it might be different. You might be looking for a certain pattern. You might be looking for a certain candle pattern as well too. And it depends on what your entry criteria is now. Apply that and apply whatever entry rules you have and get in once you see that stop hunt breaking structure and you apply your way of entering the market. Your target now would be at least 50 pips, probably a 1 to 3, 1 to 4 risk to reward ratio. Target can be also set, as we know, based on liquidity pools that already exist, such as previous highs, the initial range high, the initial balance range high, the previous day's high, the high of the current day, the previous week's high, and the high of the current week. All those are great liquidity pools for targets depending on how far away they are at the time of the setup. You can also set targets based on a measured move, meaning two or three times or four times the range of the consolidation. So price can move in terms of ranges, in terms of measurement of the range. So when you identify that consolidation coming into the close of the day, heading into the open of the next day, that range, you can measure that range 2 to 3 to 4 times more, and you can use that as your target also for your take profits. Now, here are some examples of how you can apply that to your charts. So we had a dump day the previous day here. We had a first green day setup, well, signal day that occurred here. We had the opening price, we had the closing price right here. We had the initial balance low, the initial balance high marked. And so what happened? Price closed above its opening price on this day. So this was a signal after the dump day for a first green day. The next thing we want to look for on the day of the setup is the range, the consolidation coming into the close of the day. That was this area right here. If you notice, price kind of just tapered off and then went sideways. As the market opened, there was this stop hunt right here with this bearish candle, and price sort of went into a range again, and then price has spiked up. So that gave us a break of structure at the high of the previous day. We had a pullback, and according to my entry criteria, we had this pin bar candle, huge pin rejection, and then we had this engulfing bullish candle here. So my entry would have been on the next candle or on the close of this candle. Entry came at the close of this candle, and the stop loss just below, no more than 1 bar in terms of one candle. TP could have been at this high, could have held further. There were several options as to where your TP could have been on at this time based on the swings that were created. Obviously, you would not have, depending on what the bigger picture is, there could have been further targets, but based on this small move here, this was a 6.82 risk to reward ratio trade. All right, let's do another one. We had a dump day, so price fell day before, and on this day our opening price was here, price ended up closing up here. So we now have a first green day after a dump day. We are looking for entry based on the false break reversal and the coming out of the consolidation of the close of the previous day. We marked our consolidation, this high, this low, coming into this day. We had two stop hunts happening here. This first stop hunt didn't really give us a breakout structure. I would have preferred to see a close above these highs here. And then this stop hunt gave us that basically solid move, really fast expansion coming out of the stop hunt, the false break reversal. We waited for the pullback, which was the retest. And yeah, the entry was clear. There was a pin bar engulfment here, but we would have waited for that retest, and the retest would have given us our entry, and this would have been at least a 3.21 risk reward ratio trade. Going back to at least this high, would have gotten a decent trade there. All right, so we had at least 3 days of price falling, and well, 2 days before, and we had price closing above its open here, very clear. Price, the opening price is all the way down here, and the closing price is all the way here. We had this range, and this, the reason why I included this example was to show you now, as I had mentioned before, how a first green day setup can be changed in terms of what setup you're looking for, even though you got the signal the day before. So what happened here, as I would have said in the initial balance and opening range video, we have to be mindful of these areas in the market because these are very huge liquidity pools. So we were, even though we got this green day here, we were also at the high of the week, which is the initial balance high. So remember that the initial balance is set based on the high and the low, combined high and low of Monday and Tuesday. So this was Monday's high, this was Tuesday's low. This was the initial balance high, this was the initial balance low. And we had that first green day signal. So yes, we would have been looking for a buy low setup. We didn't get this on this day. And the reason is because price was at the high of the week. And so we had our 3 push pattern. We had the consolidating range here. We had a breaking structure. We had a retest. The retest was the entry, and price fell off. TP would have been these lows, and price basically tapered off into the next day. But this is how your first green day setup could have been trumped or invalidated based on the fact that price was at the high of the week. And we tend to see that price is very sensitive at these areas, and you will tend to get false break reversals in these areas as well. So this would have been a great trade too, but you'd have had to be able to read what was happening in the chart at this point in time to say, okay, price is at the high of the week. Let us see how price behaves here before we even think of buying. And based on that, the setup was quite clear after that. Traders trapped here based on breakout traders at the high of the week. Persons who had their pending orders resting at the high, because we know there are different traders that exist, meaning we have breakout traders, we have traders who basically set orders and leave them based on their analysis and are just waiting for their orders to be triggered. And so these orders would have been most likely triggered based on the opening of the day. So it's a new candle, probably a new 4-hour candle, a new hourly candle, new 15-minute candle. And their orders would have been triggered into the market. They would have held for obvious reasons because price was still going up, and then you had this consolidation, and then price just basically fell off. And the remember how we think as traders, especially if we're not aware of what is happening. We're thinking that this, if we're in the market already, triggered into the market, or we saw a price breaking out really fast and we decided to catch the move, which is not a good thing. We see this pullback and we're thinking, oh, this is just a retracement. Price comes back, retests this high several times, a lot of wicks here, and then price just blazes away. So you have to be able to read the story that is being created while price action is happening. So while in the live charts, as I would have mentioned before, your lifetime performance is so important. You have to be so focused. You have to be able to see what's happening, read the story. Yes, there's a story that was created before giving us this signal day, but we also have to bear in mind the other story that is happening at the same time, which is the fact that price is at the half of the week. And we can expect or anticipate some reversal happening here. It doesn't always happen. The breakout could have continued and the first green day setup could have been validated. But we would have to also be mindful of the fact that and be very aware that price is also at the half of the week. And so we have to just allow price to play out, show us its hand, show us what setup it's going to be giving, and then work with that setup that's happening. Which is why it's not always good to be in a predictive mode, but better to be in a reactive mode most of the times. Let them show you what they're doing, and then you react based on that. So that would have been the final example, and I hope this video would have opened your eyes to just how the setup could play out for you. And these setups occur on a daily and weekly basis across pairs. And it's, for example, if you decided that you're only going to be trading, looking for first green day setups, you're already organized as to what you're coming to the chart to do. And it will help you with just having more clarity and being more focused and just knowing what you're doing, what you're about when you're sitting at the charts during lifetime on a daily basis, if you trade daily. All right, traders, I hope this was helpful again. I hope you're having a great trading week so far. And I will continue to post the other videos in this series. My next video will be about the first red day, which is just a complete opposite of this. It's an exact opposite of how the first green day is created. The first red day would have been going in the other direction, price closing below its open. So I'll get into that in the next video, and that video will come in short order. Please have a great trading week and take care. Bye-bye.